Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out what companies are really up to behind all the corporate jargon. Today, we're diving into a filing from News Corporation. Don't worry, we'll translate it into plain English. Let's just say after reading this, you might understand why your favorite news website has so many ads. So this is an 8K filing, a current report. Think of it as a company quickly updating investors on something important. The date to keep in mind is March 3, 2025, because that's when whatever's in this report happened. The company we are looking at is News Corporation. You probably know them. They own a bunch of news and media outlets. The main thing this report is about is News Corp's stock repurchase program. Basically, the company is buying back its own shares of stock. They were authorized to buy back up to $1 billion worth of their Class A and Class B common stock. Now, because News Corp is also listed on the Australian Securities Exchange, or ASX, they have to tell the ASX every day if they buy back any shares. There is some legal stuff about forward-looking statements. These are statements about what the company plans to do in the future, like buying back more stock, and this is a big but, the company is saying these plans could change. Market conditions, stock prices, or even just finding better ways to invest their money could make them change their minds. In other words, don't take these plans as a promise. The report also includes exhibits, which are basically attachments. Let's peek into exhibits 99.1 and 99.2. They contain information News Corp sent to the Australian Securities Exchange. Let's dive into the information News Corporation provided to the Australian Securities Exchange in exhibit 99.1. We will find out what happened on that mysterious date. Okay, it looks like there was no on-market buyback of Class A shares. That means on this particular day, the company didn't buy any of its Class A stock on the open market. Seems like a non-event. Now let's check out Exhibit 99.2. Same thing, it appears on the date listed, there was also no on-market buyback of Class B shares. Another nothing burger. So what does this all mean? Well, News Corp has the option to buy back its own stock. They are letting everyone know, as required by Australian rules, whether they actually did buy any stock on a given day. In this case, for both dates provided, they didn't buy any. Now let's take a step back and look at the bigger picture. What does this buyback program mean for News Corporation? A stock buyback is when a company uses its own cash to repurchase its outstanding shares in the open market. There are various reasons a company might do this. One common reason is to increase the value of the remaining shares. When a company buys back its stock, there are fewer shares available on the market. This can drive up the stock price, benefiting shareholders. Another reason is that the company believes its stock is undervalued. If News Corp thinks its stock price is lower than what it's actually worth, a buyback can be a way to signal that belief to the market. A third reason is to return cash to shareholders. Instead of paying dividends, which are taxable, a company can buy back stock. This allows shareholders to benefit from the increased stock price. But there are also potential downsides to buybacks. One is that it can be seen as a short-term fix. Instead of investing in research and development or other long-term growth initiatives, a company might simply buy back its stock to boost the stock price. Another downside is that it can reduce the company's cash reserves. If News Corp spends too much money on buybacks, it might not have enough cash available for other opportunities or to weather a downturn in the market. So, is News Corp's buyback program a good thing or a bad thing? It depends on your perspective. On the one hand, it could be a way to increase shareholder value and signal confidence in the company's future. On the other hand, it could be a short-term fix that diverts resources from more productive uses. Ultimately, the success of the buyback program will depend on how well News Corp manages its cash and invests in its long-term growth. In terms of assessing News Corporation overall, it's a complex picture. They have a strong position in the media market with well-known brands, but the media landscape is constantly changing. The rise of digital media and streaming services presents both opportunities and challenges. One of the biggest risks for News Corp is the potential for declining advertising revenue. As more and more people consume news and entertainment online, advertisers are shifting their budgets to digital platforms. This could put pressure on News Corp's traditional media businesses. Another risk is the potential for negative publicity or reputational damage. As a major media company, News Corp is constantly in the public eye. Any missteps or controversies could damage its reputation and harm its business. However, News Corp also has some significant opportunities. One is the potential to grow its digital businesses. The company has been investing in digital platforms and content, and these investments could pay off in the long run. Another opportunity is the potential to expand into new markets. News Corp has a global presence, and it could expand its reach even further by entering new countries or regions. In conclusion, News Corporation is a company with both strengths and weaknesses. It has a strong position in the media market, but it faces challenges from the changing media landscape. The company's success will depend on how well it manages its risks and capitalizes on its opportunities. The buyback program is just one piece of that puzzle. Thanks for watching Corporate Decoder. If you found this breakdown helpful, please like, comment, and subscribe for more deep dives into the world of corporate filings. And let us know in the comments which company you'd like us to decode next.